Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Sunevision Holdings Ltd. Interim report. Sunevision Holdings Ltd., an investment holding company based in Hong Kong, offers a diverse range of services to cater to the growing demand for data center and IT facilities. The company operates through two primary segments: data center and IT facilities, and extra low voltage (ELV) and IT systems. Under the data center and IT facilities segment, Sunevision provides colocation services that enable customers to house their IT infrastructure or equipment. This includes interconnection services that provide customers with seamless connectivity between different networks. The company also offers managed services to ensure the smooth operation of its clients' IT systems. In addition to data center services, Sunevision is involved in designing, installing, and operating extra-low voltage and IT systems for various applications. This includes building access, voice, data, power supply systems, and network infrastructure. The company also provides related repair and maintenance services to ensure the optimal performance of its client systems. Furthermore, Sunevision offers a range of additional services, including IT and optical fiber network services, as well as financing, treasury, management, and company secretary services. These services are designed to support the growth and development of businesses in Hong Kong and beyond. In summary, Sunevision Holdings Ltd. provides a comprehensive suite of data center and IT facility services, including colocation, interconnection, managed services, ELV and IT systems design and installation, repair and maintenance, IT and optical fiber network services, and financing and management services. Sunevision Holdings Ltd. market capitalization of $15 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Sunevision Holdings Ltd. holds a significant advantage in their industry. Sunevision Holdings Ltd. trades at a higher price-to-earnings ratio of 26 times and a higher price-to-book ratio of 4.49 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 77% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets in equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth are multifaceted and varied. One key factor is the expansion of new data centers, which has contributed to revenue growth. Additionally, solid organic growth from established sites has also played a significant role. The favorable interest rate environment has lowered borrowing costs, further boosting revenue. Robust demand for connectivity and hyperscale segments has driven growth, as well as an increase in AI-related deployments. Growth of interconnection, revenue, and high-value mandates from clients seeking mission-critical reliability have also contributed to revenue expansion. Furthermore, accelerating demand from Chinese technology customers, particularly for AI-driven initiatives, has been a significant driver. The IT facilities business has seen a 7% growth, while the ELV and IT systems business has experienced a 2% increase due to higher installation fee income. Unbilled revenue for data center and IT facilities usage has also increased by $68,724, as well as unbilled revenue for installation services by $374,000. Retention receivables of installation services have risen by $1,651,000, and revenue recognized in the current period relating to contract liabilities has grown by $11,687,000. In contrast, there are no mentioned drivers of revenue decline in the provided information. The company is indeed generating positive operating cash flow. This can be seen in the steady increase in net cash generated from operating activities over the past year. On page 4 and 8 of the report, it is mentioned that there was a 5% increase in net cash generated from operating activities, excluding movement in working capital, to $1,026 million in 2025 compared to the prior period. Furthermore, on page 23, the company's cash generated from operations shows an even more significant increase of $146,650 from $975,587 in 2024 to $1,122,237 in 2025. This substantial growth indicates a strong and improving financial position for the company. Overall, these figures confirm that the company is generating positive operating cash flow, which is a crucial indicator of its financial health and stability. The company's debt level has undergone significant changes in the past year. Initially, non-current liabilities decreased by $278 million due to a reduction in bank borrowings. However, this decrease was offset by an increase of $593 million in current liabilities, also attributed to bank borrowings. Furthermore, on page 33, it is noted that bank borrowings increased by $1 billion, resulting in a carrying amount of $141,816,000. In terms of interest expenses, there has been a notable decrease. Finance costs decreased by 25% year-on-year to $128 million, as stated on page 8. Additionally, interest expenses, finance costs, decreased from $172,003 to $128,378, as noted on page 23. The overall trend is clear. Total finance costs and interest on bank borrowings have decreased significantly, indicating a reduction in the company's financial burden. There is no notable activity in terms of acquisitions or divestitures. The company has not engaged in any significant transactions involving the purchase or sale of assets or businesses during this period. This suggests a stable and conservative approach to business operations, with a focus on maintaining existing resources and capabilities rather than expanding through external means. The company's financial history reveals a consistent practice of distributing profits to its shareholders through dividend payments. As evident from multiple sources, including page 23 and page 28 of the provided documentation, the company has indeed paid dividends. This indicates a commitment to returning value to its investors, demonstrating a stable and responsible approach to corporate finance. That concludes the financial summary for Sunevision Holdings Ltd. Feel free to comment below, and I will be happy to answer them when possible.